Hello everyone, this video focuses on the activity-based depreciation method. Activity is typically based on hours of use or units produced. To calculate depreciation expense using the activity-based depreciation method, you need to determine the activity rate by dividing the depreciable cost by the service life in hours or units, and then multiply the activity rate by the hours or units of activity for the current period. That will give you your depreciation expense for the period. When doing activity-based problems, like declining balance method, you need to know that the depreciation process must stop once the depreciable cost is reached. Let's work a few problems using activity-based depreciation. Let's look at JMM Property Management again and their equipment purchase. The cost of the equipment was $110,000. The residual value, $20,000. For straight line and declining balance, we used the service life of 4 years. For activity-based, we will not use the years. We will use the machine hours. The machine hours are 9,000 hours. To get the depreciation rate, or the activity rate, we determine the depreciable cost, which is $90,000. We divide it by 9,000 hours, and we get a depreciation activity rate of $10 per hour. To solve for depreciation expense for each year, we just take the machine hours used, multiply it by the rate, and we'll have the depreciation. So for year 1, we used the machine for 2,200 hours. We multiply the 2,200 hours by the $10 and we get $22,000. The $22,000 is the depreciation expense. Accumulated depreciation is the depreciation from the prior year plus the current year's depreciation. Since this is our first year, we'll add 0 to $22,000 and have an accumulated depreciation of $22,000. The book value, again, is determined by taking the acquisition cost minus the accumulated depreciation, or $110,000 minus $22,000 to give us $88,000. In year 2, we take the hours used of 2,600, multiply it by the depreciation activity rate of $10. Our depreciation expense is $26,000. To determine our accumulated depreciation, we take the current year's depreciation expense of $26,000, add it to the prior year's accumulated depreciation balance of $22,000, and we get $48,000 for accumulated depreciation. The book value, again, is determined by taking the acquisition cost of $110,000 and subtracting $48,000 of accumulated depreciation to get $62,000. For year 3's depreciation, we take 2,300 hours, multiply it by the rate of $10, and we get $23,000. $23,000 depreciation expense for year 3. The accumulated depreciation will be the current year's depreciation plus the prior year balance and accumulated depreciation, or $23,000 plus $48,000 to give us $71,000. The book value for year 3 will be the acquisition cost minus the accumulated depreciation to date, or $110,000 minus $71,000 to give us a book value of $39,000. During year 4, we used the equipment for 2,100 machine hours. 2,100 machine hours times the $10 rate gives us depreciation expense of $21,000. The accumulated depreciation then would be the $21,000 depreciation for the current year plus the accumulated depreciation of $71,000 for the prior year, or $92,000. The book value then is the acquisition cost minus the accumulated depreciation balance, or $110,000 minus $92,000, to give us $18,000. We have a problem here. Accounting does not let you depreciate an asset below the residual value. In our case, the residual value is $20,000, and we're currently at $18,000. In addition to that, accounting does not let the accumulated depreciation balance exceed the depreciable cost. Our depreciable cost is $90,000. Our accumulated depreciation balance is $92,000. So for year 4, we cannot take depreciation of $21,000. The amount of depreciation that we'll take in year 4 is the difference between the book value of year 3 of $39,000 and the residual value for the equipment of $20,000. In other words, we'll take $19,000 of depreciation expense. At that point, the accumulated depreciation totals $90,000, and the book value is $20,000. So we've allocated the cost of that equipment over 4 years using the activity-based depreciation method. The depreciation expense for each year, again, will show up on the income statement. The book value for the equipment will show up on the balance sheet. That's all there is to activity-based depreciation. Now, before we end this session, let's try one more problem. FGCU has an equipment purchase. The equipment costs on $100,000. The residual value is $10,000. The service life in hours is 50,000. The usage in year 1 is 15,000 hours, in year 2, 20,000 hours, year 3, 12,000 hours, in year 4, 15,000 hours. Use this information to answer questions 1 through 7 below. You'll notice that I'm only concerned with years 1 and 2, so don't worry about years 3 and 4. Pause your recording, solve the problem, then restart the video and compare your results with my answers. For the depreciation activity rate, you should have got $1.80. The depreciation activity rate is determined by taking the cost minus the residual value divided by the life. In this problem, we had $100,000 cost minus $10,000 residual value equals the $90,000 depreciable cost. You divide that $90,000 by 50,000 hours, and you get $1.80. Depreciation expense for year 1, then, is the machine hours used, 15,000 times $1.80, or $27,000. Accumulated depreciation for year 1 is $27,000. It's equal to the current year depreciation expense because there was no prior balance in accumulated depreciation. The book value for year 1 is $73,000. It's the acquisition cost of $100,000 minus the accumulated depreciation balance of $27,000. In year 2, the depreciation expense is $36,000 because we multiplied 20,000 hours by $1.80. The accumulated depreciation in year 2 now is $63,000. That equals the $36,000 depreciation for the current year plus the prior balance in accumulated depreciation of $27,000. Finally, the book value for year 2 is $37,000. It's $100,000 acquisition cost minus the $63,000 accumulated depreciation balance at the end of year 2. Hope this video has helped you. Thank you for watching it. Good luck.